What's up? Welcome to Looney Tunes and how the Fed plans to borrow their way out of debt. This is Bubba's Daily Update, and welcome aboard, everybody. Great to be here with you as always. And of course, markets were extremely mixed today. We had the NASDAQ higher, then it went way lower, then it closed about unchanged. S&P and Dow were gapped way higher, closed back near around unchanged to slightly higher. But the biggest story today from an equity standpoint is the Russell. The Russell was up 150 ticks, then went down 150 ticks, which is a gigantic move. If you to comprehend it, just figure it out that Dow future, it would be the equivalent of $3,000, which would be 600 Dow points. That's how much the swing was in the Russell. Now, to me, that smells of a problem with the tax cuts because they already canceled today's announcement, put it off to tomorrow. Russell is the one that is directly affected by these tax cuts because they are the small businesses that need to borrow the money. Of course, the geniuses from the Federal Reserve can announce today, and of course they did nothing, continuing their trying to borrow their way out of debt, which if any of us homeowners have ever tried that, we would be either in jail or in bankruptcy court. But of course, they're the Fed. They get to print whatever they want. And of course, because they're a private corporation controlled by Congress. Anyways, so they did nothing, and of course now the talk is that maybe they won't do 3 rate hikes next year, they might only do 2. Now this is becoming obviously more of an epidemic as the debt continues to pile up, and of course the problems continue. But again, the markets are going up, so why should anybody care? But again, I think you watch that Russell, that's an important thing to look at. The bonds were up today into a level we were looking to sell, so that worked out okay, and of course it timed in perfectly with what the Fed was trying to do. Gold was higher all day. The dollar managed to stay higher all day. So those things look fine. And of course, if we look in the ag complex, grains were slightly higher except for wheat. Wheat has become the ugly stepsister that can continue to get kicked down. And of course, they're stepping on the shorts. And look for a little bit of short squeeze there pretty quick, I would bet you. Cattle, higher, but seems to be running out of steam. I think this short covering rally is going to be over. And hogs finally sold off about $1.50. And of course, we look for them to go lower. We're looking for a pretty big sell-off in the meats, looking for a spot to buy, but looking for a sell-off first before we would expect to go. I wouldn't expect to see much higher. If they continue higher from here, I think then they're going to become a screaming sale, and it's not going to be a long. We're going to be looking for a big short. But overall, they put the tax cuts off till tomorrow, so we'll see if they actually have something. There's a lot of infighting going on. There's a lot of battling going on, and of course, we have to give our thoughts and prayers to those in New York. For another ridiculous terrorist attack. It's just so sad. And our thoughts and prayers go out to everybody there. But the markets themselves, they were resilient. And again, when you have the Federal Reserve continuing to try to put money into the market and allow these things to happen, you're going to see that the markets are going to be stay higher here because at the end of the day, the markets like the free money. Because the Fed has pigeonholed everybody into one asset class, one investment. But don't be surprised if the fixed income traders and the bond markets start to push the Fed around a little bit. Now, it's hard to push somebody around who can print endlessly, but the fixed income traders are the biggest market in the world, and they can have some say about where these interest rates are going to go, and I think they're going to try to push a little bit higher. And we've seen the bond futures fall, which means interest rates are rising. But at the end of the day, oil tried to work higher and, of course, had a very bullish report and ended up closing lower. So I think we're seeing the end of some of these runs of the cattle markets. The oil market been up on really air pockets and shouldn't be where they are. So I think we look for those to sell off. But still, markets are still fairly quiet. We have to be careful in here. We have to watch, and we have to be more ready to observe the market because, again, quiet markets don't lead to great action. Volatility is still low. Volume is still low. So make sure that you're watching carefully here what's going on before you decide to delve in. We still have the jobs number coming on Friday, which will be the last major report, and then we can probably have a better clue of what's going to happen here. But overall, markets are really kind of flattish, but the key is the Russell. The other key is tonight's Game 7 of the World Series. I was wrong yesterday. Let's see if I can be wrong twice in a row. I will take the Dodgers tonight to win it all, the World Series. And of course, make sure you check out my website, highschoolinvesting.com. We're trying to help educate high school students. And of course, we've got 300 high schools, which I finance myself, but I'm now looking for some help. And you can do that if you'd like to through Patreon, Patreon.com/Bubba Trading. and that'll help donate, and we'll do something special for those who make the donations based on the categories. In the meantime, LibertyTalk.fm, you can catch the Bubba Show every day, 2 to 3 Eastern Time. And that'll do it for today's Bubba's Daily Update. Thank you so much for being here. I appreciate your time. We'll see you back here next time on Bubba's Daily Update tomorrow. Have a great day, everybody. Thank you so much. We'll see you later.